Hey everybody, I'm Alexis Meeks.
And I'm your host, Jim Cardinal. Happy Mortgage Monday.
So this week, Jim's going to walk us through a home buyer who is retaining their current property while purchasing another one just for the flexibility of not having to move out of the first one all that quickly.
Right, Alexis. Actually, I talked about this probably about a year ago, and it was a good topic, but it seems to be coming up again. And I think it's a good thing for our market. It's a good sign for our market. And the last 2 weeks, I've gotten an inquiry each week, and one this week specifically, where a gentleman wanted to sell his house, but he wanted to first close on the new house before he did that. The issue was that he had the equity still in his house that he was going to use for the new purchase, still retained in the house. So what we did is we're hooking him up with a home equity, and he's going to be able to take out the line of credit, pull that money out, use that for the new house, purchase it, and then be able to close on the house later, just like he wanted to do.
That sounds like taking on a lot of debt. Is there, certain people maybe wouldn't necessarily want to go that route, or? Yeah,
I mean, two things. I mean, first of all, they have to be able to income and credit qualify. This gentleman did. He certainly makes plenty of money to be able to qualify for this type of situation. But there's people who qualify for these types of things, but don't want to do it because they're not comfortable. And I totally understand this. This is something that the client wanted to do. They felt very comfortable with the fact that they were going to be able to sell their house pretty quickly. I mean, no one wants two mortgages and home equity, right? I mean,
right.
If they can avoid it. So it works for this client. It just makes sense. And again, he feels real comfortable being able to handle that for a few months easily.
Well, sounds like a good option for some people, but what about the fees that are involved in taking out that home equity or, having all of those loans?
Okay, so good question. It's really an important thing. We don't actually do home equities. When I'm doing this, I'm actually referring them, and I'm referring them to specific banks because some banks either have fees up front for applying for a home equity, or they have an early termination fee, which is usually the whole closing costs. So this gentleman was taking $100,000 out of his house on a line of credit, so paying full closing costs could be $3,000. That'd be a really expensive proposition. But for this client, we hooked him up with a bank that only has a $500 early termination fee. So that was pretty easy and not that expensive to have that luxury of being able to move without closing in the morning and doing in the afternoon. We do that all the time, but right. This is just going to create a little less stress for this client, and it's something that he wanted to do.
Right. So it sounds like a good option for those people that are just looking for a little more flexibility in their moving schedule and getting all of their stuff packed up and ready to go.
Absolutely. And again, I think it's great because this guy had already sat down with his agent, and he already knew the time frame. It was only like 6 days on market, which is a nice small pocket there that is great, that he feels confident that he'll get rid of the house pretty quickly, and it's going to work out perfectly for him. So
excellent.
Good. So this week, if you're talking to first-time home buyers, or if you run into someone that does need to use a home equity to put down the down payment on a new house and then sell the house later, think of me, Jim Cardinal, 281-0077. Again, it's Jim Cardinal, 281-0077. Make it a great week, and we will talk to you soon.